let us take a look at multiple positions, okay? We're talking about positions that pay monthly dividends without diluting themselves. Now, I need you to pay very, very close attention. Now, it's not exactly market alchemy to reveal that investors love income. We all do. The best kind of income, however, comes from dividend-paying stocks that pay on a monthly basis. So you can reinvest the cash right back into the market and watch your money continue to grow. You can utilize what is known as compounding to grow your wealth exponentially. Now, while bills are due monthly, most companies pay dividends quarterly. Few stocks pay monthly dividends, and fewer still generate enough cash to pay their dividends from only profits. Moreover, most stocks in this particular category that I'm talking about consistently pay out more in dividends than they earn in net income. Now, this happens by design with royalty trust in the energy industry. However, many times paying out more than is taken in is not by design. Many stocks in this category often rely on debt issuance, asset sales, or accounting tricks to meet debt obligations. So, traders or investors who depend on these equities for income typically want more stability, and that makes sense. However, a few stocks have been able to pay sustainable dividends while still delivering a high monthly return for stockholders. All of them are either real estate investment trusts, REITs, or business development companies, BDCs. Now, both of these stock types are required to pay out at least 90% of their income in dividends to avoid income tax. Hence, some level of dividend income remains reliable. Now, family members and listeners alike, with that in mind, I'd like to present to you five dividend stocks that meet the narrow criteria that I just submitted to you. So now, please take copious notes, and let's go over these five positions that I've researched for you, my beloved Ask the Wiz Wealth Institute family and listeners alike. First position is Chatham Lodging Trust. Chatham Lodging Trust trades under the symbol CLDT. That's CLDT. Now, it pays a dividend yield of 5.8%. Now, let me tell you a little bit about CLDT. Chatham Lodging Trust serves as a hotel REIT specializing in upscale extended stay properties in high growth markets. Now, among its assets are Marriott Courtyard, Hilton Garden Inn, and Residence Inn hotels across the United States. Now, since instituting a dividend cut in late 2012, CLDT stock has established a 5-year track record of dividend increases. Now, the current monthly dividend of 11 cents per share has been in effect since March of 2016. Now, the stock price has experienced an overall upward trend since it hit a low in the $9 per share range back in 2011. Now, although the stock remains below the $31 per share peak hit in 2015, it has been stuck in a trading range for about 2 years. However, with a growing dividend currently paying close to 6%, investors are paid very, very well while they wait for the growth to resume. Now, on CLDT, let me go over how you get paid 3 ways from this particular company. Now, if you buy the stock straight up, okay, then you'll get paid the dividend. However, if you decide that you don't necessarily want to buy the stock straight up, but you still want to get paid from the position, then you implement what is known as our dividend option trifecta effect strategy, the Ask the Wiz Wealth Institute dividend option trifecta effect strategy. And you do your drill down on the position. You find out the shareholder record date, call option on the run-up date, dividend payout date, put option on the payout date, on the run down as the position moves down. And then it's easy, just punch in the symbol CLDT at yahoofinance.com, look at the ER date, and then you do the drill down, and based upon your findings on the ER date, pertaining to the ER date, call a put, and you get paid again 3 times off this one position. Now, I'm going to give you 5 positions, so you're going to have 15 opportunities, 3 times each one of the 5 positions to get P.A.I.D. That's over and above if you bought the stock straight up or the position straight up to receive the dividend payout, which would be the fourth way to get paid from this position. All right? Okay. With that in mind, let's go to our next position. Our next position is Gladstone Investment Corporation. Gladstone Investment Corporation pays a dividend yield of 7%. Now, it trades under the symbol GAIN. Now, Gladstone Investment Corporation serves private businesses by providing debt and equity financing. This company, GAIN, is known as a business development company, a BDC, and it provides senior term loans, senior subordinate loans, and junior subordinate loans. The firm also invests in preferred and common equity in these same types of firms. Now, dividends have generally risen since 2010. Payments of monthly dividends amount to 6.5 cents per share, though the company paid an additional 6 cents per share in dividend twice this year alone. Now, the company spent several years in the $7 to $8 per share range since it briefly fell to a low of $2.26 per share in March of 2009. Now, GAIN stock experienced an upward trend over the last 2 years, and today it stands near $11 plus or minus per share, not far from its 52-week high. Now, despite this rise, the current price to earnings ratio stands at about 8 times earnings, which is great. Gladstone Investment Corp, symbol GAIN. The next company I want to give you is Main Street Capital Corp. Pays a dividend yield of 5.7%. Trades under the symbol MAIN. Now, Main Street Capital Corp, family members and listeners alike, the company acts as a provider of debt and equity financing for lower middle market and middle market companies. Now, by providing this financing, this BDC, it's also a business development company, creates an avenue by which companies can grow or transition ownership. Now, aside from paying a substantial dividend, MAIN stock has generally increased its dividend over time. The exception occurred back in 2014 when the dividend fell from $2.04 to $2 per share. The equity pays 19 cents per share in monthly dividend currently as I speak, though 2 special dividends of 27.5 cents per share were added in the last year. And moreover, the MAIN stock price has also maintained an upward trend for several years. And like most stocks, it took a hit during the 2007 and 2009 financial crisis. And since 2008, the stock has risen from under $8.50 per share to the $40 plus or minus per share range it is today. Main Street Capital Corp, symbol MAIN. The next company I want to give you is Pennant Park Floating Rate Capital. Trades under the symbol PFLT. All right? Dividend yield of 8.25%. Once again, that symbol is PFLT. Now, this is also a business development company who partners with middle market companies to provide capital. Now, PFLT works on a partnership approach. They operate on the core belief that middle market lending provides great opportunities for high returns. Now, those high returns have been reflected in the dividend of PFLT stock. Since introducing its dividend back in 2011, increases have occurred every single year until this year, where it has remained the same. Monthly dividends amount to 9.5 cents per share. Now, the PFLT stock price has shown more stability. Since going public in 2011, the stock has stayed in a range of $10 to $15 per share. It currently trades at just under $14 plus or minus per share. And this places the P/E ratio at about 11.5. Now, although profits will likely not increase substantially for the foreseeable future, a consistent 8.25% return will remain attractive to many traders and investors. PFLT. And the next position I'd like to present to you is Stellus Capital Investment Corp. This is my last position I want to present to you. Stellus Capital Investment Corp. Trades under the symbol SCM. And this company has a dividend of 10, double digits. That's right, 10.75%. Now, SCM, like many of the other recommended income vehicles that I just submitted to you. SCM is also a BDC, business development company, specializing in investments to middle market private companies. Now, the firm has $1.5 billion in assets under management, and it specializes in private credit and energy private equity. Now, SCM stock launched its IPO back in 2012 at a $15 per share. Like with other companies tied to energy, the 2014 price slump hit its interest very, very hard. The stock lost half its value by 2016, and although the price now stands at around $12 plus or minus per share, it continues to remain below its original price of 5 years ago. However, despite the stagnant stock price, beloved, SCM stock pays an attractive dividend. Since early 2014, the firm has paid monthly dividends of 11.3 cents per share. And moreover, the stock's PE stands at about 7.5. Now, with energy prices at their highest levels since prices fell 3 years ago, the equity could be poised to move higher. Stellus Capital Investment Corp., symbol SCM,